Radio, and of course on YouTube.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
It's Bloomberg Business Week. Tim Stenovic and Mike Regan. We are live in the Bloomberg Interactive Brokers studio. Mike, we got a minute now. I want you to explain what you were talking about with the markets that we didn't actually get to, because I think some people are wondering.
Yeah, well, it's a weird day in that we do have this risk on equity rally, but we also have oil's up, yields are up, the things that we've really been freaking people out all year, and the VIX is up, which is odd on a big update like this.
All Apple? Like, I know everything is up, but look at the weight that Apple has in the S&P 500.
It's certainly, as goes Apple, as goes the market, is a safe bet on most days. But it is a pretty broad-based rally. What they were saying, something like only 60 stocks down. And you got your work cut out for you for finding the down stocks later today.
I got some stocks, some stuff from the Philadelphia Semiconductor Index. But yeah, I mean, you're right. Only 81 stocks lower in the S&P 500, 421 are higher. But Apple certainly has the outsized weight because of its huge market cap. All right, well, let's get another check of the markets. The Dow is higher by 0.7%. The S&P 500 higher by a full 1 percentage point. The NASDAQ higher by 1.2%. We got 28 stocks higher in the Dow. We got 2 lower in the Dow. Let's get to world and national news. Nancy Lyons is standing by in our D.C. newsroom with the latest. Hey, Nance.
Thanks, Tim. President Biden is in Boston today for a series of appearances, beginning with a stop at Logan Airport, which will be receiving $62 million in newly approved infrastructure money. Bloomberg's Irv Chapman has the latest.
The airport plans extensive modernization of its international terminal, which opened in 1974.
It needs a significant upgrade to accommodate the passengers flying in and out from all over the world in support of international trade. It means crowded gates, longer taxi times, lost baggage, long lines, flight delays, and very unhappy customers.
The president noted that New York's LaGuardia Airport has been rebuilt into a bright, modern facility from the third world terminal he once complained about. In Washington, Irv Chapman, Bloomberg Radio.
Within the hour, President Biden is expected to speak at the John F. Kennedy Presidential Library in Boston and hearken back to Kennedy's moonshot speech that was made 60 years ago today as he pushes for his cancer moonshot. He wants to move the country closer to cutting 50% of cancer fatalities over the next 25 years. Ukraine is claiming dramatic advances in its counteroffensive against Russia. The top commander says Kyiv's forces have recaptured about 3,000 square kilometers since the beginning of this month. Ukrainian presidential advisor Ihor Zhovska tells Bloomberg the job is far from over.
To get the victory, definitely we need more weaponry. We need more artillery. Artillery matters when starting those kind of campaigns.
Ukraine's Ihor Zhovska tells Bloomberg current weapons levels are not enough to finish the war before the end of the year. Global news 24 hours a day, on air, and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thanks so much for that update, Nancy Lyons, Tim Stenovic, and Mike Regan in the Bloomberg Interactive Brokers studio. I hope my wife is not listening right now, because I'm going to tell a little story. Yeah, where's this going? That's the question. So I was home in California a few months ago, and my mom was like, you got to clean out your junk. She's even like a different word for stuff, right? So I go into this closet, and I find like some, letters and like pictures from an old relationship there, and I'm thinking to myself, yeah, I should probably throw this stuff away. But maybe I should have actually held on to it, because it turns out that selling your ex's stuff, if that ex was Elon Musk, could actually be worth some serious coin.
That's right. We got a great story here on the terminal about Elon Musk's ex-girlfriend, Jennifer Gwynn. She dated the world's richest man when they were both studying at the University of Pennsylvania, auctioning a cache of photos and other memorabilia over Boston-based platform RR Auction.
Can you believe this?
I got to say, I have a podcast called What Goes Up, little quick plug I'll squeeze in there, and we do the craziest thing in markets at the end of it every week. I think I found mine for this week.
Yeah, I think so too. I mean, something's worth whatever someone will pay for it, right? Up for grabs are 18 candid photos capturing the billionaire's youthful moments as a college student, a handwritten birthday card, and a gold necklace Musk gave to his then girlfriend. Okay, so how much does this stuff go for? That's the question, right? Well, as of Sunday night, the birthday card signed Love Elon was edging north of $10,000. 23 people had bid on it. What do you do with something like this?
I think I have a conspiracy theory.
Okay,
I think
what is
Elon's bidding on that himself to make it look, because I don't know what you do with it. I don't know. Is Elon's autograph worth 10 grand? I guess.
I don't know. What are you doing with photos of Elon Musk when he's like 19
Yeah.
in the dorm room?
Right.
Such a different time too, right? If you think about iPhones now, it's like the photos aren't worth anything these days.
Yeah, right. Well, hey, people have been arguing about the valuation of Tesla for years, so I guess it's time to argue about the valuation of Elon's old stuff.
All right, you got something perfect for the What Goes Up podcast. This is Bloomberg.
headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We've got a fourth day of gains for the U.S. stock market. The Dow, the S&P, NASDAQ all rallying. 43 minutes to go ahead of the closing bell. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks with a bid today, with the Dow currently up 213 points. S&P's gained 40, while NASDAQ rises by 1.2%. The U.S. 10-year yield now at 3.36%. Gold is up 10. Oil is also climbing. And Bitcoin is higher by 3.4%. Among the main 11 S&P sectors, all were trading in the green, led by gains in energy and technology. And leaders to the upside in the Dow, Apple and American Express, while Amgen fell 4% and led to the downside. In other news, Goldman Sachs plans to cut several hundred jobs this month, and Mosaic fell 6% amid weakness in the fertilizer names. Wrapping things up, Oracle reports after the bell. Live from the First Breaking News Desk, I'm Bill Maloney. Charlie.
Okay, we thank you very much, Bill Maloney. And to hear live breaking news over at your Bloomberg, type Squawk, SQUAWK, on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie Pellet. Really appreciate it. Well, you might remember last hour, I talked a little bit about this on our simulcast. Today's big take, it's about the world's hottest housing markets are facing a painful reset. We're talking about places like Vancouver and Toronto in Canada, and then also places including Australia and other parts of the world. The story written by Ainsley Thomas and Enda Corinne and edited by Kara Wetzel, our San Francisco bureau chief. She joins us right now on the phone from our San Francisco bureau. Kara, great to have you with us this afternoon. So what are the themes that sort of tie these housing markets together? And where are we talking here? Because not every single housing market is created equal.
Yes, that's right. Great to be here. The sort of the markets that we're really in focus on are the ones that have been hugely bubbly, for lack of a better word, over the past few years of the pandemic boom. This is Australia, New Zealand, Canada, where investing in real estate just became a huge phenomenon. You've seen price gains of 30% plus per year. And, not surprisingly, those are the ones that suddenly are rapidly cooling, because now that we have this synchronized, interest rates from central banks around the world, borrowing costs are going up everywhere. And you have this combination of now prices are at record levels, or were at record levels, and borrowing costs are now just way out of people's reach. So they're having the quickest come down now.
Kara, when I read about potential double-digit home price declines, I kind of have a nasty flashback to, about 12, 13 years ago in the financial crisis.
I mean, you covered that, right?
Yeah. So you're like, get some...
it's a little close to home for you, Mike.
Some chills up the spine a little bit, yeah. But I'm wondering, so much has been done in the U.S. to safeguard the financial system, and we've really moved away from those adjustable rate mortgages in the U.S. that were part of the problem back then. But I get the impression the rest of the world is still more exposed to adjustable rate mortgages than we are in the U.S. Is that true? And are there concerns out there about some sort of ripple effects from a drop in property values into the global financial system?
Yes, that's absolutely true. So the U.S. has vastly come away from adjustable rate mortgages in the aftermath of the financial crisis. It's been about 7% is the average of loans there in the past 5 years, and it makes sense because rates have been so low. Why would you not just lock in those rates? But the U.S. is actually something I've just found in working on this story is pretty unique in terms of having 30-year fixed mortgages or even 15-year.
That was surprising to me.
A lot of these countries, they're just the mortgage system works by. They have mortgages that may reset every year, depending on what central banks do, or they may even reset just based monthly, or just be directly tied. So that is definitely sort of what some of the concern is in some of these markets. Like in New Zealand, for instance, more than 50% of mortgages are going to reset to a higher rate by next June. So these are. It's not just home buyers that are affected by the rising rates, as it largely is here in the U.S. It's also homeowners who now are going to be facing higher monthly payments on loans. In some cases, if they bought at very high levels, probably were already stretching to make to pay for these things. And so yes, that is the concern, and that brings ripple effects of consumer spending and other types of things for these economies. So that's something, again, as central bankers weigh how much to raise rates and the effects on the broader economy, that's something I think those bankers have to keep in mind there.
Kara, is there any silver lining here with this sort of coming down from these sky high prices? And I ask this question fully realizing that we're in an environment where interest rates are higher. So, even if houses become more, quote unquote affordable, that monthly payment could be even higher than it was for a more expensive house because of interest rates.
Yes, it could. But I mean, yes, the silver lining is that I think, we've all been witness to this real estate frenzy, in the U.S. as well, where, you have bidding wars and you have to fight, 15 other offers to get a home. And that's not healthy either. And so slowing that down, and that's, not necessarily a problem. And it kind of puts us back toward normalization. And yes, if home prices do come down a bit, if you're a homeowner, you're still sitting on a fair amount of equity. Prices have gone up so much. It's hard to cry too many tears for like, my house gained 20% a year is now only up 10% from that figure. You're still doing okay. So maybe this provides an opportunity for, a bit of a cool down in the market and the stabilization.
I was fascinated in this story, Kara, that it says New Zealand was really the poster child of the pandemic housing boom. What's going on there? Is it just a matter of the lowest interest rates, or were people flocking to New Zealand in the pandemic?
Have you seen those pictures? I
yeah.
spend the rest of my life
I'm willing
there.
to flock there personally.
Oh my God.
It is a
Looking
big
it up
disaster
today.
play, right? I remember we're all going to move there.
Yeah.
Right.
Us and Peter Thiel, right?
Yes, exactly. It's part of it. I think it just becomes a cultural thing that this is where people see they can build their wealth, and it's a big investment play, and like it's just the culture of you need to be a homeowner, and so everybody flock to it, and it kind of builds on itself. I think a similar thing happened in Canada. It's just where people see the ability to build wealth, that you need to buy a house, and so in that extreme, and then this colliding at a time of low rates. Obviously, the pandemic caused a lot of people to rethink how they're living, and they need a bigger house to work from home, and that type of thing. It was a bit of all these issues colliding.
Yeah, it's certainly. Yeah,
if we were a tabloid, we could have gone with the headline "Underwater Down Under."
Oh, nice. Mike, always thinking about headlines as senior editor for Bloomberg News. Kara Wetzel. Hey, Kara, great to have you with us. It's Kara Wetzel, San Francisco bureau chief for Bloomberg News. She joins us on the phone from our San Francisco bureau. Follow her on Twitter. You can do that at Kara Wetzel. This is Bloomberg Business Week. Tim Stenbeck and Mike Regan in for Carol Master this afternoon, and this is Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It's Bloomberg Business Week. Tim Stanovic and Mike Regan in the Bloomberg Interactive Broker Studio. Mike, have you seen, driving around New Jersey or New York City, those billboards that say, they're like advertising Ohio? It says work from home, not an overpriced studio apartment, for example.
I have not, no.
These things, I've seen them through New Jersey, I've seen them through New York. They get quite a bit of attention. Well, the organization is called Jobs Ohio. We're going to be joined in just a few minutes by the president and CEO of Jobs Ohio, but we're also talking Intel and chips manufacturing in the state. First up, though, let's get over to Charlie Pellet, because, Charlie, we got less than a half hour to go.
Indeed, and we have got the Dow, the S&P, NASDAQ all advancing. You mentioned Intel on an update for the rest of the market. Intel down now by less than 0.1%. Tech shares are rallying. Let's begin with NASDAQ up 135, up 1.1%. The NASDAQ 100 index up by 1%. S&P right now up 36, higher by 0.9%. The Dow up 175, up by about 0.6%. Among those tech names advancing today, Apple, it is rallying the most since May, up now by about 3.8%. Pre-order data show the iPhone 14 Pro Max was the best-selling model, surpassing what the older version did in a similar time frame. Again, Apple shares right now, they are advancing by 3.9%. The 10-year yield right now, 3.37%. We have got the 2-year yield, 3.57%. Spot gold up $8 the ounce to $17.25, up 0.5. West Texas Intermediate crude up now by about 1.6% at $88.21 a barrel. Wall Street investor focus looking ahead to tomorrow morning's inflation data when we get the consumer price index. Headline CPI expected to cool to an 8% a year pace, while the core measure that excludes food and energy is seen accelerating. Stephanie Aronson is Director of Economic Studies at the Brookings Institution.
There is a lot of momentum still in the core. We're expecting, for instance, housing prices to be very persistently high and other sectors as well. And so I think that this one reading is not going to be enough to dissuade the Fed from a large movement at its next meeting, even if it is a bit softer than the numbers had been coming in recently.
And again, right now we've got the 10-year yielding 3.37%. Twitter says Elon Musk's latest move to cancel his agreement to buy the social network is invalid after the billionaire said the company's treatment of a whistleblower gave him another reason to walk away from the $44 billion deal. Twitter shares down 1.5%. Tesla up by 1.6%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie Pellet. Well, last week, President Biden took a victory lap on a law to boost chip manufacturing. He attended the groundbreaking of Intel's new semiconductor manufacturing facility. It's just outside of Columbus, Ohio, touting one of his legislative wins in a crucial midterm election season. So why Ohio? And how does a partnership like this work? And how does Intel find the right people? After all, the facility is going to support 3,000 full-time jobs. That's according to Intel. For this, we turn to JP Nassif, President and CEO of Jobs Ohio. It's the Economic Development Corporation. It's a private one for the state of Ohio. He joins us this afternoon from Dayton. JP, how are you?
Doing great. How are you doing?
Hey, we're doing well. Thanks for joining us. So give us some color on how this went down, how Intel chose Ohio, and why you, in your opinion, I mean, it's your job to play up the state. I mean, you got to be the biggest cheerleader for the state. Why you think Ohio was picked as the site?
So, yes, it is my primary role. And first, thank you for having us here today. Those of us that have lived here for a long time in Ohio, we made the choice to buy into this value proposition. It's a very interesting value proposition in the American Midwest, in particular in Ohio. But Intel, it was the largest investment in Ohio history, the largest economic development project in the history of the state. And for those of us that have been here a while, it was the type of project that always went somewhere else. We've had steady outflow. Our population has been migrating west and south, really since after World War II. NAFTA took a lot of our manufacturing south of the border, then with offshoring to Asia. So for decades, the name Rust Belt developed and Flyover State developed. This is something somewhat of a phenomenon that's occurred. Those of us that stayed at it, we won because we've been working at this so hard during the tough times. Our economic development muscle has become very lean. But if you talk to Intel, the reason we won, according to them, we had a site available. The reason we had a site available is we've been investing in sites. This Governor DeWine, Lieutenant Governor Husted made a priority to invest in sites. We have a very sophisticated private sector developer that worked hard to option the land required while the negotiation was going on. So they were incurring risk simultaneous to us negotiating. So we had a site available, big, complex site. Couldn't have vibration, so it couldn't be close to a highway. Needed up to and more than 1,000 acres to be prepared for expansion. Needed access to millions and millions and millions of gallons of water. There's a lot of the water in the process for semiconductors. We also, Intel told us they were confident we had the talent that they needed. You may not know this, but Ohio has over 150 educational institutions, community colleges, private universities, public universities.
My wife went to The Ohio State University. So
the Ohio State.
Yeah, she would be very upset if I didn't say The Ohio State. So it's well known in our house.
Well, I'm sure it is, as we know from all the alumni that went there. I went to the University of Dayton, but there's so many great. Our governor went to Miami University, great universities here, but we produce per year 177,000 graduates.
Wow.
And up to this point, literally 45% of those leave and go to other states. So we have a starting point, a multi-tiered talent strategy where we're producing more STEM talent. We have plans through innovation districts that the Governor DeWine announced to have 3 innovation districts that will triple the number of STEM degrees that come out of our state. We've got certification programs to certify existing workers so they can upgrade their skills and be available to work at high-end manufacturing and manufacturing technologies. And then, as many people leave the coast and other areas, they're not all going to Texas or to Nashville or to Florida or to Denver. A lot of them quietly are coming to Ohio.
And JP, I can't help but wonder if that being so close to the Ohio State University there in Columbus is part of what motivated Intel to be attracted to this site. Am I right that Intel's actually going to be investing into some of the colleges and universities of Ohio as part of this deal?
Intel has announced that they're going to be investing $50 million into a consortium of Ohio universities to help develop the very specific type of talent they're going to need. And it's a consortium of universities led by the Ohio State University, Dr. Christina Johnson, outstanding leader there. And yes, Pat Gelsinger has mentioned Ohio State several times as a primary strength. But again,
as long as none of that goes to their football program, they got enough money.
They do have enough money there. Hey, JP, we unfortunately have to leave it there, but you got to come back and join us again. Really appreciate you taking the time this afternoon. JP Nassif is president and CEO of Jobs Ohio. It's the private economic development corporation in the state. He's joining us on the phone from Dayton, Ohio. Let's get to world and national news with Nancy Lyons in D.C. Hey, Nance.
Thanks, Tim. Russia is vowing to regain the initiative after a lightning advance by Ukraine's forces in the north and the east. Ukraine's top commander reports they've taken back 3,000 square kilometers of territory just this month. Bloomberg's Rosalind Matheson reports Russia's forces appear to be in disarray.
Footage of tanks driving in wayward fashion, Russian troops essentially looking like they're running to get back out of the way, in a sense that they're abandoning their posts very quickly. And so it's actually moved much faster than people expected. Certainly it seems to have moved faster than even the Ukrainian commanders expected.
Bloomberg's Roz Matheson, a Kremlin spokesman, says Russia's military campaign will continue until its original objectives are achieved. Well, the last primaries of this election season will be held tomorrow in Delaware, New Hampshire, and Rhode Island. House Majority Leader Steny Hoyer tells Bloomberg he's expecting the House to stay in Democratic hands.
I think that there isn't any doubt in my mind that we can hold our majority and expand it. Probably not. I'm not predicting a big victory, but I am predicting a victory for us and an appreciation of seats, not a reduction.
Congressman Hoyer says the Supreme Court's decision on abortion changed the political landscape. Donald Trump's legal team is objecting to the Justice Department's proposed candidates to serve as an outside special master to review more than 11,000 documents taken from Trump's Mar-a-Lago home. But the team is not giving reasons for those objections. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts.
Thank you so much for that update, Nancy Lyons. Tim Stenivek and Mike Regan in for Carol Master this afternoon. We're live in the Bloomberg Interactive Brokers studio in New York. Mike, have you done any work travel lately? Have you been able to, do you do work travel?
I don't do a lot. I haven't really done any since the pandemic at all. Like next to nothing. Unless you count Zoom. Zoom doesn't count, I guess.
Zoom does not count. No, definitely not. But it's funny. Carol and I didn't do any until about a year ago. And I think it was Milken when we kind of, for the first time, got out of New York City. Last year, that they did Milken in October and then also in May. That was kind of our first big work trip. It turns out that a lot of U.S. companies, though, they're starting to step up travel, and they're saying, don't worry about that economic uncertainty, even though, a lot of the conversation, Mike, was Zoom is replacing a lot of the need to travel for work.
Yeah, right. Well, it is surprisingly, it's affordable time to travel. While demand is climbing, the average booked fares were down 23% to $419 in August from $543 in mid-May. So buy them while you can, I guess.
Yeah, this Travel Manager Trip Actions, they work with companies to book travel. They said in a new report, it's about 10% cheaper, or $10 cheaper, rather, than in August of 2019. I was surprised to see that because we've heard so much over the summer about how expensive air travel has been. But I actually checked for some flights that we're hoping to take in November. I checked this morning, and they were surprisingly inexpensive to head to California. And I think it's because a big part of that is, demand in that part of the year. But also because oil prices have come down quite a bit.
Right, absolutely. And I think business travel has not rebounded the way consumer travel has, tourist travel. So there are different kind of time frames there. When you like to travel for vacation on the weekend, business travel, you might go in the middle of the week. So maybe that's part of it too.
And also so important for us to keep in mind that business travel is incredibly important to airlines because business travelers spend more money. They're traveling oftentimes at the front of the plane, which is a lot more expensive, of course, and then booking at the last minute too. So that ends up costing more money. Check out this story and more reporting as the return to office continues. You can do that on the Bloomberg Terminal and at Bloomberg.com. This is Bloomberg Radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Fourth day of gains for the U.S. stock market ahead of that key CPI report tomorrow morning, 8:30 a.m. Wall Street time. S&P pushing higher now, up by just about 1%. The S&P advancing 39 points to 4106. We've got the Dow up 206 now, higher by 0.6%. NASDAQ, the outperformer, up 140 points, a gain right now of 1.2%. 10-year yield 3.35%, 2-year yield 3.56%. Spot gold is up 0.5%, $17.25 the ounce, and West Texas Intermediate crude up 1.4%, $87.97 for a barrel of WTI. The rapper and designer Kanye West, who now goes by Ye, says he is done with his corporate partners and plans to branch out solo. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. It's 3:48 on Wall Street.
The following is an editorial from Bloomberg Opinion.
This editorial was written by the Bloomberg Editorial Board. Scientists have long warned that climate change poses a threat to global economic stability. This summer's severe droughts, which have disrupted agriculture and industry from Central Europe to China, show that the crisis is already here, and governments have not done enough to prepare for it. Needless to say, the best way to limit climate emergencies is to reduce greenhouse gas emissions. But policymakers also need to do more to adapt to a changed world. To combat drought in particular, governments everywhere should be more aggressive in cutting water use and reducing waste. They should also do more to improve water infrastructure and increase storage capacity. This year's long, hot summer shows why they can't afford to wait. This editorial was written by the Bloomberg Editorial Board. For more Bloomberg Opinion, please go to Bloomberg.com/opinion or OPIN Go on the Bloomberg terminal.
This has been Bloomberg Opinion.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
Oh, it's that time already. We got less than 10 minutes to go until the market closes. Let's drive to the close. For that, we are joined by Max Wasserman, founder and senior portfolio manager at Miramar Capital, joining us on the phone from Northbrook, Illinois. Max, how are you?
I'm doing well, thank you. How are you guys doing?
Doing well, thanks. Hey, we just heard from Charlie Pellet, another rally that we're seeing. It's the fourth day in a row of gains for the S&P 500. Do we trust this rally?
Yeah, I'm very skeptical of this rally because everybody seems to be so confident in their ability to predict inflation and what the Fed's going to do. So they're telling you they're going to be raising rates, and it's not just that because of peak inflation. They're going to try to bring it down substantially. So I think they may be surprised, regardless of the outcome tomorrow with CPI, if the Fed says we raise interest rates 75 and we're going to continue until we see substantial decrease. It's not just that it's peaking, but they want to see a decrease in inflation.
Is that sort of your base case, Max, that we'll see 75 basis points at the next meeting and then a continuation of that size hike for the foreseeable future?
I think what we'll see is I'd be shocked if we don't do 75 now, considering that they've really come out, the Feds, and said that they were going to be very aggressive. After that, I think it's probably going to be more in line with probably waiting for the data and more in line of 50 and 25. But regardless of that, keep in mind that the tapering comes off. So now you're going to have basically bonds are not going to be supported by the Fed coming in September. So that's going to should be raising interest rates. So I think it could be a 1-2 punch that I think people are just a little bit too excited right now.
You know, Max, it's great to have a guy like you on the show because so often we talk to strategists or macro types who refuse to talk about individual stocks. But I know you got some stock picks for us, so I want to dive into them a little bit, especially as you're talking about potential for even higher interest rates, presumably even higher mortgage rates. But yet Home Depot is one of your picks. And I'm curious what you're seeing there and whether or not a potential cool down in the housing market affects how you're thinking about Home Depot at all.
Right. Well, first, our approach is we're dividend growth investors. So we're looking for companies that have the ability to grow their cash flows, increase the dividend, have tremendous market share potential. Yeah. If you look at Home Depot with a $900 billion addressable market, there's a few things people need to keep in mind. One, there's about 130 million houses out there, and 70% of them are over 25 years of age, and 50% are over 40. So regardless of what's happening, you need maintenance on these homes. And when you look at it from that perspective, we have underinvested in the upkeep in our homes for such a long period of time that we think there's plenty of potential there. And also, we're looking at from this price point. We're looking at a stock now around 300 that was 420 at a peak, and it's down about 30% year to date. It's trading at a market multiple about 17 times, a 5-year dividend growth rate of 17%. So we think this risk-reward is favorable. Now, it doesn't mean in the next month it couldn't come down a little bit more. But if we look at the low on this stock of somewhere around 266, which is about another 15%, and the upside well over 30%, we think somebody with a long-term time horizon, more than 6 months, will be rewarded.
Hey, Max, forgive me. We're getting a headline right now on the Bloomberg terminal. New Jersey raised to A from A- by Fitch. The outlook is positive.
All right. Finally, some good news for my Garden State there.
Your home state, Mike.
Let's lever up. Time to lever up.
Hey, Max. I don't have a good transition for that. I was going to say, speaking of levering up. But I want to talk General Dynamics here because we just talked Home Depot, one of your picks. Also, General Dynamics, another one. Why? What's your justification here? Why are you bullish?
Well, again, consistency of earnings is with General Dynamics in the defense industry. People fail to remember that regardless of who's in power, Democrat, Republican, it really doesn't affect the demand for defense spending in even economic times. So we have a continual demand for defense spending. And actually, in light of these political times and with Europe rearming, if you will, it really supports General Dynamics.
Yeah,
business is like 30%. That's the nuclear subs. But on a positive note, it's a little tick on General Dynamics, is 20% is aerospace. And that is the Gulf Streams. And that's when you see people flying more hours, they're flying, more demand for private jets by corporations and high net worth individuals. And that's where we see a tremendous potential is on that 20% side of the business, as well as defense.
Well, I want to talk defense real quick. We have this great feature on the Bloomberg terminal, SPLC. You type in, and you can see the supply chain for the company. General Dynamics, this is shocking, Mike. 72% of the revenue comes from the U.S.
Yeah, makes sense, I guess, all those weapon systems. And but, to your point, Max, I guess as long as these geopolitical tensions are flaring, there's not going to be any politician anywhere with the stomach to cut the defense budget, presumably.
Well, yes, but these are long-term contracts in nature, and also the fact that General Dynamics does the Marines. They do the nuclear subs, which are big demand, and also on their vehicles. They have the Abrams tanks, right, and they have the Stryker vehicles, with Europe really wants a lot of these tanks, and they want a lot of these vehicles. So that really demand for what they're producing. But in defense in general is a long-term commitment, which has the ability to pass inflation on. But General Dynamics, again, has a little bit of more cyclical side with 20% in aerospace, which we think has been underestimated because of COVID. Nobody was flying for a period of time. So for many years, we didn't look to that side of the business to grow. But we're seeing more miles are being flown, and the new upgrade in their fleet of the G500, 600, and the International 800.
I just saw some video of that. That is cool.
Full price on these, too.
The G800, how much is that going to send me back? 70, 80 million?
Yeah, I mean, it's pocket change for you. But
I could see you rolling up to work in that, Tim. You gotta figure out a place to land it down on Lexington.
72 million. I wonder if that includes Wi-Fi. That's the question.
I think they'll throw that in for you guys, along with maybe a bottle of champagne if you buy it.
That is, I will tell you though, that is a cool looking plane. I saw some video of that recently at the Denver airport. I mean, it is pretty. I would definitely take one, Mike. Okay, Max. Before I let you go, you got one more company in here that we want to talk about. GPC, a Genuine Parts Company. What's going on there?
Yeah, that's a $22 billion market cap out of Atlanta, Georgia. And if people aren't familiar with them, they own the Napa Auto Centers. And the majority of their business do it for you. So keep in mind one thing. You have about 300 million cars out there that are over 12 years of age. And they require about anywhere from 800 to 1,000 a year in maintenance. And with rising interest rates, right, it's harder to buy new cars. The expense of buying a new car, financing, Trying to find a used car is becoming difficult. So people are repairing their cars, and with the complication, they need somebody to do it for them. And they've been experiencing like a 10 to 12% growth rate in that side of the business. And that's really where we see it. You know, if you look at the economy slowing down, you're going to keep that car longer. And with 12-year average, you know you have a built-in sort of annuity stream if you're General Parts.
That's a good point.
Because the people need to repair their cars.
Max, we unfortunately got to leave it there, but please come back with us. This was great. And also, I can talk about jets for days. So pretty cool to hit on General Dynamics there as well. Max Wasserman, founder and senior portfolio manager at Miramar Capital, joining us this afternoon on the phone from Northbrook, Illinois. Well, we are just a couple of minutes away from the close here. The S&P 500 holding on to gains, up a full percentage point. The NASDAQ up 1.2%. The Dow higher by 0.6%. Coming up next, it's our Beyond the Bell coverage with our friends at Bloomberg TV.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic, Caroline Hyde, Taylor Riggs counting you down to the closing bell, and here to help take us beyond the bell. It's our global simulcast, joined right now by Tim Stenovic and Mike Regan. Carol Massa still lost at sea. We welcome our audiences across Bloomberg Television, radio, and YouTube as we parse the most crucial moments of the day. With the equity market up for a fourth straight day here in the United States, the gains are there. The question is whether they hold for longer.
Yeah, that is the big question. I posed that question a few minutes ago to Max Wasserman, the founder and senior portfolio manager at Miramar Capital. He said he's a little skeptical of this rally. He said that everybody seems to be so confident that they know exactly what the Fed is going to do. He thinks that people may be surprised to find that the Fed continues to raise rates regardless of the outcome tomorrow, because he thinks they got to raise pretty aggressively, not just to get inflation to moderate, but to get it to fall significantly down to 2%.
Yeah, maybe some skepticism among the hedgers out there, too. We do have the VIX up almost 6%. That's the most since late August. So despite this strong rally, Caroline, a little bit of nervousness, perhaps, people wondering about how long this rebound can last.
Quoting the VIX in percentage points. Oh, Mike, come on.
No, I will do that every time.
You stick to your convictions.
That's the hill you want to die on, okay.
I will let the radio guy on TV.
You guys back, okay?
We love Mike on our TV. Meanwhile, I mean, going across the assets, you're right, though, to have pointed out earlier, it's interesting that we've seen commodities on the higher side, too, so much for this peak inflation narrative, but the dollar, it is lower.
Michael Reagan, bond yields are up 1.5%. How about that?
Well, the dollar is lower here on the day, and that's probably a big part of the reason why we're seeing a little bit of an extension of this rally that we had last week in the final 3 days of that holiday shortened week here, a full 5 days here, people clapping, people cheering. The Dow Jones Industrial Average going to finish the day higher by roughly 230 points. It takes a while for these numbers to settle, but it's roughly about 0.7% higher. The S&P 500 going to finish higher by about 1% or 43 points. The NASDAQ higher by about 1.3% or 154 points, and the Russell 2000 going to finish higher by about 1.2%.
Yeah, quite a bit of breadth in this rally, too. What we're seeing in the S&P 500, if we look under the hood a little bit, 422 stocks higher. Only 80 stocks moved lower in today's session.
Only 80 stocks moved lower. And now,
keep that in mind when you see
once you go to Taylor there, I want you to check the volume and tell me what that means. We'll come back to you.
All right, I will kill some time while Tim desperately searches the volume on that. But yes, let's take a look at the breadth here, at least underway, despite maybe some of the volume comments. From a sector level, this is extending sort of the broadening breadth of this 4-day rally. That narrative might continues today. Tech, hardware, energy, and auto components, those are up each about 1.5% or more. And there are no losers. So despite the worst performers, those sectors are actually still in the green. Take a look at the bottom. It's still media and entertainment, food and beverage, semiconductors as well. Even the, quote, worst performers on the day, Mike, you're still up about 0.2%.
Well, let me tell you about some of the big gainers, Taylor, among the individual stocks. Apple, obviously the biggest contributor to the S&P rally today. Those shares up about 4%. That's the most since May. Analysts are very bullish about the pre-order data that showed the iPhone 14 Pro Max was actually the best-selling model, surpassing what the older version did in a similar time frame. We also have Gilead Sciences up about 4% and
Does
change.
this move this forward, though? I mean, I know everyone's making a big deal about it, but given that they're starting the sales of this earlier than what they did in the last cycle, is this just going to be a pull forward of some of this, or is this going to really sort of blow out the entire quarter and a half?
Well, I think they're, basing this on the time frame of the previous model. So looks like it's on pace to do pretty well, Romaine. So,
did you order yours yet, Romaine?
No, I think I'm going to hold out for the iPhone 14 and a half.
That one comes in 6 months.
He's still smarting about the cost of all the wires.
Yeah, good God. Do I have to buy new wires if I get the iPhone 14?
I think the EU's trying
I'm
to
still
solve that.
surprised they didn't raise the price of that entry level, right? They're still keeping it at $799, and we talk about so much about
Peak inflation.
Yeah, could be. We'll see what happens to margins when they factor all this into the current quarter and the next quarter. Hey, I got some decliners for you. Mosaic, among the worst performers on a percentage basis, actually the worst performer, down 6.8% in today's trade. Agricultural stocks just sinking today. Grain exports from Ukraine continue to ramp up, and additional ships have been authorized to depart in recent days. So not necessarily good news for companies that are grain adjacent or agricultural companies. That includes CF Industries, finished the day down by more than 3%. Archer Daniels Midland, another one of those, down by 3.6%. And then I talked earlier about the chip stocks. Lam Research finishing the day down by 0.8%. They fell after a report from Reuters last night that said the Biden administration plans to broaden curbs on U.S. shipments of semis for AI and also chip-making tools to China.
Meanwhile, check this out for a cross-asset chart, because I'm going for global macro movers. For our radio audience, everything is green, all apart from some bonds on the US side of things, which yields are pushing higher. But overall, I won't steal Taylor's thunder, because this is a story of dollar weakness. What you can't see on this vertical in the foreign exchange element is the fact that the dollar is weaker. That is why many are saying, look, commodities go higher. We've got natural gas up 4.8%, Brent crude getting a wiggle on, WTI crude up to $87.90. As the dollar weakens, we can therefore pile back into the metals story. So much for all those demand concerns at the moment, the dollar beats that narrative. And on the FX side of things, just everything powering higher against a weakening dollar. We got the Swedish krona, even though we've got, of course, the political story unraveling over there. Well, not becoming clear over there at the moment in Sweden. Really interesting moves in terms of, yet once again, more of a right persuasion coming from Europe. We're seeing the Swiss franc up 0.7%. British pound also strengthening. Key, the euro up 0.75%. Is this a more hawkish ECB that directs the travel for the dollar as well? And really, overall, we therefore see money sort of shine a light on the fact that this is a risk-on day, maybe because of that dollar story. I would say the yen, though, is the only real FX pair that is weakening against the US dollar, because we're waiting for more verbal intervention. Sovereign bonds, I mean, money piling into European bonds, Japanese bonds. What about the US, Taylor?
Well, it is the story here of bond price lower, that is red, versus yields higher. Of course, here as we think about a week 3s and a week 10s, a doubleheader auction today that had a little bit of a tail by about 1 to 2 to 3 basis points or so across the curve. And so that sort of lifts up the market, sort of a steepening here when we think about maybe less inversion, if you will, on the yield curve, at least when it comes to 2s, 10s. So really up about 5-6 basis points further out on the long end. I think what's really interesting is we're getting a lot of perhaps maybe differing information, Romaine. You had a headline earlier about the runway looking to cut its workforce by about 24%. In contrast, you have Bank of America coming out and saying that the consumer's strong, delinquencies are low, cash is on hand. So how do you square the two?
Well, I mean, they're squaring it by, I guess, cutting costs. I mean, we've seen the trend with regards to rent the runway. Then you hear the comments out of Brian Moynihan, and now we're getting Oracle earnings crossing the wire here. And, well, I mean, it's relatively in line with estimates. So you talk about business spending and how that component fits in. Their fiscal numbers, their fiscal first quarter numbers coming in, adjusted EPS at 103. The street was looking for 106. Revenue was $11.45 billion. The street was looking for 11.44. So pretty much right on the nose here. And when you talk about some of those operating margins, well, it was slightly down, 39% versus an estimate of 39.6% here. So you have some of the big components out there. We've heard a lot about consumer spending. We're hearing a lot about business spending. I think we get Adobe a little bit later, which kind of straddles both worlds. It'll be interesting to see how all this holds up, guys.
Yeah, really, we want to be pushing it. This is why the data all this week is going to be so crucial. You're not only getting the micro data from the oracles as to really how strong an enterprise investment is at the moment, but the narrative of a consumer when we do see Rent the Runway really posting full-year revenue guidance that is having to be pulled back as they see active subscribers not living up to the market expectations. Only 194,000 people using this subscription at the moment. But I think this is why retail sales...
This is Rent the Runway?
This is Rent the Runway.
You use this a lot, right?
I'm an addict, I have to say.
Well,
full
yeah.
disclosure.
So Go ahead, Tim.
I was gonna make a rent the runway comment and then get back to Oracle. I think what's surprising to me about this rent the runway commentary coming from the company is that this is the time of where we are post COVID, where things are supposed to get back to normal. People are going back to work 5 days a week. We're seeing the return of in-person events. The U.S. Open absolutely setting a record this weekend for the last 2 weeks, and then a company like Rent the Runway should be positioned to take advantage of that, given what it does.
Could you argue with some of these layoffs, it's idiosyncratic risk versus even if the macros look good, it's an execution, it's a strategy risk, nothing about sort of the broad macro environment.
Well, yes, I definitely agree with that. I think, too, that we talk about some of these companies, particularly some of these relatively newer ones that did a lot of hiring, that sort of scale up in order to get the size that they want, and maybe some of them went a little bit too far.
Yeah, let's be realistic here. Rent the Runway is what, a $300 million market cap company? I'm not sure how indicative it is of anything. I mean, that's about one VIX vol point, I think, roughly.
Thank you, Mike.
I mean, they have to say, they had 2 milestones in the second quarter, record quarterly revenue and positive adjusted EBITDA, ahead of timeline that they had outlined despite the uncertain environment. If you go into the earnings statement, they sound more positive. They say the restructuring plan announced today underscores our commitment to building Rent the Runway into a business that is highly profitable. Here speaks some of the narrative we see in the venture capital area, in the startup community, is they need now profitable growth. It can't be growth at all costs.
And look at the Silicon Valley Bank comments we got a little bit earlier today as well. Kind of dovetails nicely with that.
Has anyone talked to Kanye West about this?
Yeah,
I think if he's going to renounce all of his contract agreements, which I don't think you can technically do.
Or buys the whole runway, I think.
But, suppose he does. I mean, could he, just go over to Rent the Runway?
He wants to direct.
Or how about he joins that?
He wants to direct his community.
What about the private equity firm that Kim Kardashian is starting? Can he go over there and do that?
I don't think he's...
You got to read this interview, by the way. There's a great interview on the Bloomberg terminal today that Kim Basine did with Kanye. He just called Kanye on the phone and apparently was just like...
That's what Kim does.
Then, Kanye, of course, will just rant for hours.
That's what Kim does. That's how he rolls. He even runs into these celebs when he's on vacation, too. It's pretty amazing how he works that out. Hey, our coverage is going to continue on Rent the Runway, on Oracle, and more, but that is all the time we have for our cross-platform coverage this afternoon. We'll be back tomorrow, same time, same place. It's the close on Bloomberg TV, radio, and YouTube. We'll see you guys tomorrow.
You're listening to Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Let's get to world and national news with Nancy Lyons in D.C. Hey there, Nance.
Thanks, Tim. President Biden will be channeling John F. Kennedy on the 60th anniversary of the former president's moonshot speech. Biden will be speaking in just minutes from Boston. He's expected to highlight his administration's efforts aimed at ending cancer as we know it, which he calls his cancer moonshot. Talks aimed at heading off a major U.S. rail strike may go down to the wire. 2 of the nation's largest railroad unions are demanding better benefits. The Brotherhood of Locomotive Engineers and the Smart Transportation Division represent half of all railroad union workers. House Majority Leader Steny Hoyer of Maryland admits he is concerned.
Obviously, a railroad strike at this point in time would be extraordinarily detrimental to our economy and to the American people, and we want to avoid that.
Congressman Hoyer tells Bloomberg both the Congress and the Biden administration are looking at ways to prevent the strike. Friday marks the end of a cooling off period, and the unions say they are making every effort to reach a deal. King Charles III is in Scotland, where has given his first speech before the Scottish Parliament as the British monarch.
I know that the Scottish Parliament and the people of Scotland share with me a profound sense of grief at the death of my beloved mother.
Members of the public are now filing past the coffin of Queen Elizabeth II, which is now in St. Giles Cathedral in the Scottish capital of Edinburgh. It will remain in the cathedral until tomorrow, when it will then be flown to London. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Thank you so much for that update, Nancy Lyons, Tim Stenovic, and Mike Regan. We're live in the Bloomberg Interactive Brokers studio this afternoon. We heard Romaine mention it just now, but Kanye West has renounced his corporate deals after he clashed with J.P. Morgan and Gap. This story by Kim Basine, it's among the most read on the Bloomberg terminal. It's just absolutely blowing up this afternoon after Kim published it earlier. The rapper and designer is sticking with his current contracts, but says that's it. No more companies standing in between me and the audience.
Yeah, even with billions of dollars of revenue, the fashion industry's most lucrative royalty deals at stake, he's shown a willingness to publicly battle the very same corporations he's most closely tied with. I like, though, Tim, how he refers to himself in the third person.
Yeah.
He calls himself Ye.
Ye.
I'm going to start calling myself Mike. Mike approves of that.
I called Kim after he published this story earlier just to make sure I was pronouncing this correctly. And he says, yeah, you actually... He now goes by Yi, so that's how we refer to him in the story. But you're right, he talks about himself in the third person. He said that foremost, what he's working on are high-profile, long-term arrangement. He's got that with Adidas to produce sneakers like the Yeezy Boost 350. That expires in 2026. He's also got an apparel agreement with Gap. That ends in 2030. In the meantime, they're just going to have to get along. Here's what he said to Kim, quote, "They my new baby mamas. I guess we're going to have to co-parent those 350s. I like that, co-parent.
And
they got to work together.
Good. Which he's familiar with.
Where are we going to go?
He's familiar with the co-parenting.
Yes, that is a good point.
Strategy. And I like Kim, of course, did what every journalist is supposed to do, and he called representatives for Adidas and the Gap, and they declined to comment. I'm not sure I'd want to touch that if I was a PR person either.
No, they're staying silent. He's going to keep. Okay, so as for what he's going to work on, he intends to open his own Donda campuses that's named after his late mother across the country. Those will house shopping, schools, farms, and dorms all together. He'll also keep operating Yeezy Supply. It's an e-commerce shop that serves as the primary release point for new Yeezy goods, hitting the market in an endless series of product drops. Check out this story. It is just blowing up. It's on Bloomberg.com and, of course, on the Bloomberg terminal. This is Bloomberg.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Oracle reported adjusted revenue for the first quarter that exceeded the average analyst estimate, but shares are trading little change right now. Oracle's first quarter adjusted revenue came in at $11.45 billion. Estimates there, 11.44. Again, we do have Oracle shares trading little changed after hours. Rent the Runway has unveiled a restructuring plan as subscribers drop. It says that plan will deliver $25 to $27 million in annual cost savings. It was an up day on Wall Street with the Dow, the S&P, and NASDAQ all advancing ahead of the CPI report. We had stocks closing out their best run in 2 months, up 4 days in a row for the S&P, gaining 43 points today, up by about 1.1%. The Dow up 229, up 0.7. NASDAQ up 154. That was a gain of 1.3%. 10-year yield 3.35%. Spot gold today up 0.5%, $17.25 the ounce, while West Texas Intermediate crude up today by 1.4%, $87.96 a barrel. Recapping, stocks did advance today 4 in a row. S&P today up 43, up 1.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie Pellet. Really appreciate it. Well, in recent weeks here on Bloomberg Business Week, we've talked about plant-based food. I mean, we're talking about like Impossible Foods and Beyond Meat and the like. We've talked about fungi-based foods as well, but what about meat that's grown directly from animal cells? So chicken and beef that tastes like chicken and beef, but it's not actually from animals that have been killed. There's a company working on that. It's called Upside Foods. Amy Chen is joining us. She's Chief Operating Officer of the company. She joins us this afternoon from San Francisco. Earlier this year, the company did raise a huge Series C funding round, $400 million. SoftBank, Tyson Foods, Bill Gates, Whole Foods, among the organizations and people that invested in it. Amy, it's good to have you with us. How are you?
I'm doing great. Thanks so much, and happy Monday from California.
Yeah, happy Monday right back at you. Okay, how do you guys do this?
So it's exactly as you described, actually. So we take real animals, take some cells from those animals. We essentially select the ones that are going to taste the best and grow the best. And then we feed them something that we call cell feed or media. It's essentially the same kind of nutrients that they would normally get inside of an animal's body. We just do it in what we call a cultivator, which is like a stainless steel tank that you might see in a brewery or in a yogurt factory. We allow them to grow, continue feeding them, and then ultimately are able to harvest meat that is as close to the real thing as you can possibly get because it's grown from real animal cells.
Amy, the timing of this segment is perfect because Tim and I have been sitting here since 2. We're both starving, so we are 100% on board with whatever you're growing there. But I'm curious, when will we be able to see this on the market? I understand it has to get regulatory approval first, right?
That's exactly right. And so we are currently pending regulatory approval. But as soon as that happens, we will be excited to start being able to share it more broadly with consumers. And on the point of being hungry, I'll share that because it's noontime here. But one of the things that really convinced me about the potential and the promise of cultivated meat was actually the taste of it. Growing up in the food world, taste is king and queen, and everything in between is sort of table stakes. And so when I first had my bite of cultivated meat, I can tell you that's the moment when I really believed. And when you think about plant-based and a lot of these other things that require people to make changes in their habits, I'm from Texas, and I love my meat. And so I have always just wanted to be able to think about a way to change the world without requiring people to really change their habits. And I think this does this in a really compelling way.
So, Amy, if you were to be able to buy this in the store, when you looked at the ingredients on the box, what would it say? And also, are there antibiotics? Are there chemicals in it, et cetera?
No, one of the things that's amazing is that it doesn't have antibiotics or hormones or some of the things that you think about with respect to conventional meat. And so we're still working on exactly what the label would say, but it would essentially say chicken grown from animal cells or cultivated from high-quality animal cells. There's a whole range of products, as you can imagine, everything from a chicken breast or a chicken fillet through to a sausage or a hot dog. Different products with conventional meat would have different labels, and so you'd see that same kind of thing reflected here. But ultimately, the promise is that the real cells can be the meat that we all love.
Amy, I'm wondering if there's the potential down the road to even sort of improve on Mother Nature, and make steak with less cholesterol or chicken that, I don't know, comes pre-flavored with buffalo sauce or something like that.
You're just playing with God there, okay? All right, Mike.
But I'm curious, is there the potential to actually enhance foods and make them even healthier and more nutritious than what we're used to?
Long term, absolutely. I think that's something on our roadmap in the horizon. I think in the near term, we're focused on delivering amazing, delicious meat that is safe and of high quality and that fits into people's diets and into their habits in a way that makes a lot of sense. But absolutely, longer term, I mean, exactly what you say. You could have a steak with the nutritional profile of salmon or anything else that you could imagine in terms of allergens or other issues that are currently part of the conventional meat system.
Well, Amy, speaking of the conventional meat system, a lot of people who are vegetarians, they don't eat meat, for a few reasons, and among those reasons include treatment of animals, or they're just against killing animals for food. Is this type of thing vegetarian friendly?
It's a great question. I would say absolutely, but it probably depends on what kind of vegetarian you are. We have a company that is a mix of passionate meat eaters and carnivores and folks that are passionate vegans and vegetarians. And what we've generally found is that people who are vegetarian or vegan for ethical reasons or environmental reasons will embrace cultivated meat. Folks who are maybe vegetarian or vegan for religious reasons or other ones may want to take a second look.
I was going to say the environmental footprint of cultivated meat sounds like it must be way less than the farm-grown version. Is that safe? Is that a selling point of this product?
Absolutely. I think one of the pieces when you think about what's happening in the future is people predict that demand for meat is going to almost double by 2050. And when you think about the amount of land and water, it's about a third that's currently used for agriculture, 1/5, 1/6 of all greenhouse gases. The world simply cannot sustain the kind of demand increases that we're expecting on meat. And so one of the things that's really exciting about cultivated meat is because it happens in a controlled environment similar to a manufacturing plant. It has the potential to have a substantially lower footprint. There have been third-party academic studies that have suggested it could be as much as a 90% reduction relative to beef, for example.
Wait, Amy, before we let you go, we only have like 15 seconds. How does it taste?
Absolutely delicious.
It tastes just like chicken, right?
There we go.
Tastes just like chicken, which is always a joke, right? But it's true, and it can change the world at the same time.
Amy Chen is the COO of Upside Foods. They're working on lab-grown meat. Perhaps we'll be able to buy it in the stores sometime soon. You're listening to Bloomberg Business Week on Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It's Bloomberg Business Week. Tim Stanovic and Mike Regan were live in the Bloomberg Interactive Broker Studio. Shares at Oracle bouncing around between gains and losses in the after hours, up by about 0.2% right now. The company reported sales that met estimates, and it touted the growth of Cerner as well. We're going to get the details with Dan Morgan at Synovus Trust Company in just a second. First up, though, Charlie Pellet, we got a lot happening in the after hours.
Indeed. You mentioned Oracle. We just heard from Rent the Runway. It has unveiled a restructuring plan. It says that plan will deliver between $25 and $27 million in annual cost savings as the company reported an unexpected decline in subscribers. It is a fashion rental company. After hours, we're looking at Rent the Runway plunging by roughly 14%. Apple rallied the most since May, up 3.9% today. Pre-order data showed the iPhone 14 Pro Max was the best-selling model, surpassing what the older version did in a similar time frame. Today, we had the Dow, the S&P, and NASDAQ all advancing today. Stocks rose on the final day of trading ahead of the release of key consumer price data, with risk sentiment boosted by speculation that inflation is near peaking. Today, the S&P was up 43 points, a gain of 1.1%. The S&P back at 4,110. That is a gain today again of 1.1%. The Dow today up 229 points, up 0.7%. NASDAQ up 154, a gain there of 1.3%. 10-year yield 3.35%. Spot gold up $8 the ounce, up by 0.5%. And West Texas Intermediate crude today up 1.5%, 88.07 a barrel. So tomorrow morning we do get the CPI report. Max Wasserman is the founder of Merrimack Capital, and he was our guest right here on Bloomberg Business Week.
I'm very skeptical of this rally because everybody seems to be so confident in their ability to predict inflation and what the Fed's going to do. So they're telling you they're going to be raising rates, and it's not just that because of peak inflation. They're going to try to bring it down substantially. So I think they may be surprised, regardless of the outcome tomorrow with CPI, if the Fed says we raise interest rates 75 and we're going to continue until we see substantial decrease.
And, of course, we will have that number as it breaks. Complete coverage tomorrow morning, 8:30 a.m. Wall Street time, right here on Bloomberg Radio. Deutsche Lufthansa says it has reached an agreement with its pilots that raises pay for cockpit crew and excludes strikes for about a year in return, as Europe's largest airline seeks to draw a line under a series of crippling disputes that exacerbated an already chaotic summer travel season. Lufthansa's ADRs up today by 3.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thank you so much for that update, Charlie Pellet. Well, shares of Oracle bouncing around, but higher by about 0.4%. The company reported sales that were in line with estimates. It touted the strides made by its transition to the cloud and the future benefits from the acquisition of the health records provider, Cerner. Sales increasing 18% to $11.4 billion in the fiscal quarter that meet the average analyst estimate, according to data compiled by Bloomberg. Let's see what Dan Morgan has to say about this. He's senior portfolio manager at Synovus Trust Company. They got about $20.7 billion in assets under management. Dan joins us once again on the phone from Atlanta. Dan, good to have you back with us. How are you?
Thank you very much. I appreciate you having me back.
Yeah. Hey, so Oracle earnings. You've had a few minutes to dig into these. What sticks out to you?
Well, it's kind of interesting because when the numbers first came out, the stock was off. Now the stock was slightly up. And still people haven't figured out how to interpret these numbers. As you said before, it looks like they're pretty much in line on the top in terms of revenue. They did miss a little bit on adjusted EPS of $1.03. Estimate was about $1.06, so a slight miss there. But they did come out and say that, FX, the strength in the U.S. dollar did impact earnings by about 8 cents. So it's kind of hard to filter through those figures. But I think we focus on their core growth area, which is cloud services and license support revenue. That came in at $8.42 billion. The street was looking for $8.29 billion. That was up 14%. And then cloud license and on-premise license revenue, $904 million, up 11%. Street was looking for $891.5 million. So this stock really trades on the growth of their cloud business, which is about 30% of their revenues. We all think of Oracle, guys, as the old relational database giant, which they still are. They got about 42% of the relational database market. But the street likes to see how they're stacking up against the likes of GCP, AWS, and Azure, which are all the big players in the cloud space.
You know, Dan, I'm curious how you're thinking in sort of broader terms about information technology spending as a whole going into 2023. You know, so many people now worried about a possible recession. What's the outlook for sort of IT spending writ large?
Well, it's kind of interesting because if you think about, let's say, the enterprise software area, that's where Oracle is. The expectations are that revenues or earnings are going to grow about 13% this year. If we look at like some of the most recent data that has come out from, let's say, some of the major research firms like IDC or Gartner, the projection this year is about a 4% growth rate. It's lower than what it was in 2021. But to be honest with you, the market doesn't really seem to look at any of these surveys. All they care about is what the Fed is doing. And everything trades off these inflation numbers are going to come out this week. And if it looks like the Fed's still going to go 50, 75 basis points, they sell the tech stocks off because they interpret that they're going to slow down in terms of these IT budgets because of concerns about a slower economic growth going forward, even though Gartner and IDC come out and say, hey, we're still looking at, let's say, 4% growth in terms of these budgets. And enterprise software is one of the faster growing segments within the overall tech space.
Hey, Dan, I'm wondering what this says, kind of similar to what Mike was thinking about the broader macroeconomic environment. We talked a little bit about spending now, but I mean, what can Oracle tell us about the way that companies, or at least Outlook, tell us about the way that it thinks that companies are going to continue to spend?
Well, obviously, we're going to get more information when we get to the conference call. We're going to learn more about the Cerner acquisition. We're also going to get more, let's say, color in regards to what can we expect going forward in terms of demand? We've done a couple of interviews, Tim, where you and I have talked about where FX was a big issue, but the demand was really strong. Yeah. And also Cisco, to a certain extent, there was component shortages, and they were very adamant that demand was very strong. So I think that's what people are going to focus on this upcoming call from Oracle, which is we know about FX. It impacted Salesforce, Microsoft, some of these other big software companies. We want to know, is the forward guidance going ahead? Do you feel strong about demand for, let's say, relational database and cloud and some of your other key markets? That's what everybody's going to be focusing on. I think we can put aside the fact that the dollar is strong. We get that. Let's move on. Is it a demand issue or is it a bigger issue that we need to focus on?
Hey, Dan, got to leave it there. Really thank you for joining us this afternoon. Dan Morgan, Senior Portfolio Manager, Synovus Trust Company, joining us on the phone from Atlanta. Continuing to get quite a bit of news this afternoon. Redhead crossing the Bloomberg terminal. Peloton Executive Chairman and co-founder John Foley is leaving the company, stepping down as part of a leadership shakeup. Marks the latest change for a business trying to pull out of a deep slump. We're also seeing the chief legal officer, another co-founder, is leaving, will be replaced by an executive from Uber. You're listening to Bloomberg Business Week. Let's get down to world and national news with Nancy Lyons in D.C. Hey, Nance.
Thanks, Tim. Well, President Biden is in Boston, where this afternoon he is delivering his administration's Cancer Moonshot Initiative. And it's no coincidence that he's giving this speech on the 60th anniversary of President John F. Kennedy's Moonshot speech. Well, President Biden is also ready to sign an executive order to help expand U.S. biomanufacturing and to reduce reliance on China.
The draft order lays out a strategy to bolster domestic manufacturing, harnessing biological systems to create a lot of different products like new medicines, human tissues, biofuels, and food. They say the COVID pandemic created a sense of urgency around developing a clear and consistent strategy. And beyond healthcare, they're considering agriculture and energy. The Biden administration plans to deploy resources to support the plan, although it's not clear whether there's funding to back it. In Washington, I'm Amy Morris, Bloomberg Radio.
Ukraine is appealing for more weapons, along with continued U.S. support to build on its successes over the weekend in liberating territory from Russian control in the Kharkiv region. Former U.S. Defense Secretary Leon Panetta says he's worried that the Ukraine advance will spur a dangerous reaction from Russian President Vladimir Putin.
There are Russians who are criticizing him now in Moscow because of this retreat that's taken place. And the real issue is whether Putin now strikes back. He already has hit back on the infrastructure, whether he resorts to more, including the possibility of battlefield nuclear, all of that creates a dangerous moment here.
Leon Panetta speaking on Bloomberg's Balance of Power. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts.
Thank you so much for that update, Nancy Lyons, Tim Stenovic, and Mike Regan. We're live in the Bloomberg Interactive Brokers studio. Mike, this is probably the most excited I've been to get to a story this afternoon, because it's about the U.S. Open, and I got really into the Open this year, more into it than ever before. I think a lot of it had to do with the 2 days that Carol and I got to spend at the Open interviewing folks. You caught some of it on TV too, right?
I did. Yeah, I kind of caught the bug for it this year too. And I followed tennis as a kid, and then I kind of got out of it. But it's great to see sort of this changing of the guard, to see these new players come in, especially on the men's side. Obviously on the women's side too, with Serena retiring. But it's good to see these fresh faces out there, these young guys.
Well,
see what they can do.
A couple of those young guys were out in full force last night. We got Alcaraz, who ended up winning this. Carlos Alcaraz. He's only 19 years old. He was playing Casper Ruud, who's 23. He defeated him in 4 sets. It took 3 hours and 20 minutes. I watched on TV, but a lot of people, a lot of high-profile folks were in the audience. We're talking about folks like Thoma Bravo co-founder Orlando Bravo. He was there with his son Alexander. There's a great picture of them in this piece. Other names, including Bill Ackman was there, Larry Fink, Blackstone's Steven Schwartzman. We got Evan Greenberg from Chubb. The list continues to go on.
I know, it's funny when you watch it on TV and they keep showing all the celebrities. I wonder, are there any normal people at this thing at all?
Not sitting where the celebrities are sitting, I'll tell you that. I looked at some prices for the tickets yesterday. They were $400 for the worst seats.
Wow.
Which actually was surprising. A colleague of mine here at Quick Take, she ended up getting a ticket to the finals, and even before the dynamic pricing kicked in, it was $300. So it's expensive to go to in the finals. What I will say is those grounds passes are just a great value early on in the tournament, where you can see everyone.
True. And also, hey, a match could last, 5-6 hours?
Yeah.
Maybe? You get per hour, it's maybe it's affordable. I don't know.
That's a good point. I got to see Alcaraz beat Tiafoe on Friday night. I saw that in person, and that was a really cool one to witness. Check out this story and more on the Bloomberg Terminal and at Bloomberg.com.
news, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Peloton shares surging after hours, now up by 9%. Some key departures. Peloton Interactive Executive Chairman and co-founder John Foley is stepping down from the fitness company as part of a leadership shakeup, marking the latest changes for a business trying to pull out of a deep slump. Again, after hours, Peloton shares, they are moving higher, up now by just about 9%. The Dow, the S&P, and NASDAQ all rallied today on the final day of trading before the release of key consumer price data, with risk sentiment boosted by speculation that inflation is near peaking. Tomorrow morning, we get the CPI report, 8:30 a.m. Wall Street time. Complete coverage right here on Bloomberg. S&P up 43, up today by 1.1%. The Dow up 229, up 0.7%. NASDAQ up 154, up by 1.3%. 10-year yield 3.35%. The 2-year yield 3.56%. Spot gold up 0.5%. $17.24 the ounce, while West Texas Intermediate crude up 1.5% today, $88.14 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, we spent a lot of the program talking about publicly traded companies and indeed the macroeconomic environment. It's time for us to check in on what's going on with venture capital and with privately held companies. Very pleased to have with us Saul Trujillo, a partner and CEO at Latitude Ventures. Saul joins us this afternoon on the phone from just outside of LAX. So appreciate you taking the time, Saul. You got a lot of titles here. Chairman at Trujillo Group Investments, at Latitude Ventures as well. Really good to have you with us. How are you?
Great. Good to see you.
Yeah, great to see you. Thanks so much for joining us. Got a really cool thing going on at Latitude Ventures. You guys did just close a $100 million funding round, and it's just focused on Latino-founded early-stage companies. JP Morgan Chase is an investor in there. They've got Bank of America in there too, Mass Mutual as well. Talk to me about the approach and kind of what sets Latitude Ventures apart.
Well, first of all, let me take a step back, if you don't mind.
Yeah, please.
The cohort is the fastest growing cohort in the United States of America. In about a week and a half, there's going to be an event called Latitude, where we're going to announce a new U.S. Latino GDP report done by the Latino Donor Collaborative. And sorry for all the titles, but the punchline there is that you're going to see that the Latino cohort was, the last study, the 7th largest economy in the world. And it soon will be known as either the 6th or maybe the 5th largest economy in the world, depending upon how the final study comes out. So it's big, it's massive right here inside our country. So therefore, the second point then is that, as we've talked before on your show, that the amount of capital flowing into the growth cohort of America has been paltry. The Bain Consulting did a study a year ago that showed that less than 1% of all invested capital by the top 25 VCs and PE firms, less than 1% went into this cohort. So I'm a capitalist. I believe in capitalism, and I also believe that capital should flow to where the growth is. So that's why I decided that we would create Latitude Ventures. And Latitude Ventures is, as you said, focused on Latina founded firms that are going to be growing, but they're going to be growing across many sectors. And so that's what Latitude Ventures is. That was the motivation, because I think there's a way that we as a nation, all the financial institutions that manage assets and invest capital on behalf of others, they should be creating new structures, new ways to reach this cohort, because it's only going to grow for the next 30 or 40 years.
Sal, could you talk to us a little bit about sort of maybe not so much what companies you're looking to invest in, but what sort of industries, what type of businesses are catching your eye as far as potential beneficiaries of this fund?
Well, that's a really important question. And we're not at this stage focused on any one sector, because there are so many Latina founded firms that are playing in all the sectors. So we've started off with funding last year a company that's in the MEMS LiDAR space. So it's high tech. But as we think about the virtual world as we're entering into, when you hear Zuckerberg talk about Meta and you hear Omniverse and all these other things, all of that gets enabled by having really smart sensors, if you will. So we have a company that's developed some new technology, new capability that could radicalize the cost structure and the capabilities of it. We have another company that's focused on polymers. And as we think about the form factors we all carry, the flip phones and rollable, big screen TV, all that, we have another company that's developed some new technology, again, new polymer capability that, again, defies old standards. We have a company that's in the beverage space. And given the Latino cohort in the United States and those who have come from other countries, some of the fruit-flavored drinks, but natural, sugar-free, are all the rage with them, and also the millennials and the Gen Z cohort. So we have a company there. We have another company in fintech that's now going to radicalize kind of the services into the Latino cohort, which is massive, which is growing, and it's the highest and fastest growing income cohort in this country. And I could go on talking about them, but we're looking hard. We're creating the pipeline. We're creating the visibility so that any Latino and Latina that has been shut out of other, let's call it venture funds, their capital sources, that they can come here and they're going to get a fair look. Now we're database, business case, you got to be, really well done, but we're going to be rigorous, but open to them so that they can come in the doors and seek capital, and we can make a difference for our country.
Well, I was going to ask you about that, Saul. Are these companies largely that have been shut out from traditional VC funding? And if so, why do you think that is? Is it just, they didn't have someone championing them the way you're doing? Or what is the backstory here for why this is so crucial and so needed?
That's a great question, and I wish I had all the answers. But I think in part it's that we as a country have had to learn to look in new places for talent when we think about people. We always used to look at the Ivy League schools for kind of the best, most talented people. And we're finding out there's a lot of people coming from a lot of places people didn't think about or use. And it's the same now with entrepreneurs. You're used to a certain cohort of people that were developing new companies, et cetera. They had to have started out of Stanford or MIT or some other place. And now there's all these people that are creating companies and really competitive companies that are coming out of other pockets. And so a lot of the traditional venture companies, and maybe even PEs when they get bigger, they keep on looking in the same places. And this is why I'm encouraging people to open their eyes wider. The aperture has to be wider angle lens so that you can find all these places and invest in them. I just created Latitude Ventures along with Gary Acosta when we founded it. And now more recently, Oscar Munoz joined us, the former CEO and chairman of United Airlines. We've been putting it together because we see the opportunity and we want to make sure that everybody can see it, because my bet is between now and the end of the decade, $1 trillion of capital should be flowing here so that we can grow GDP at a highly competitive rate versus doing it the same way. And it's what I call 21st century America looks different than 20th century because of, one, the digitization of it, two, demographics.
So we unfortunately have to leave it there. You got to come back and spend some more time with us. It was a real pleasure to have you join us this afternoon. Saul Trujillo is a partner and chief executive at Latitude Ventures, also chairman at Trujillo Group Investments. He joins us via Zoom from just outside of LAX. Appreciate him taking the time this afternoon. A big thank you to Mike Regan for filling in for Carol today. Mike, you're back tomorrow, right?
I am indeed.
Awesome.
Yes.
Looking forward to it. A big thank you also to the entire team here at Bloomberg Business Week and Bloomberg Radio. This is Bloomberg.